Most Singaporeans keep their stocks inside CDP, and for good reason. You get to keep your shares safely under your own name, you get your voting rights, and of course, you get to enjoy all the free AGM buffet meals. And for years, I also kept part of my Singapore holdings inside my own CDP account. But recently, I finally decided to move them out. In this video, I will explain why and whether you should do the same. And with that being said, let's jump right in. So to understand why I moved my shares out, you first have to understand how Singapore stocks are kept. And really, there are just two ways. The first method is CDP, or the Central Depository. When you hold shares through CDP, the shares sit directly at SGX under your own name, and there's no broker in the middle holding them for you. Essentially, you are the rightful owner of your shares, or like the Khaleesi of a little SGX kingdom. The second way is through a custodian arrangement. In this case, your broker or its nominee hold the shares on your behalf. The shares are typically registered in the nominee's name, while you remain the beneficial owner. In other words, the shares are still yours, meaning you can sell or transfer them according to the broker's processes. But they are held in custody for safekeeping rather than being registered directly in your own name. Some investors, however, simply prefer seeing their own name associated with their Singapore shares. That's why many chose to hold them directly through CDP, as it provides that additional sense of direct ownership and control. That's because beyond having the voting rights and the free AGM buffet you truly deserve as a shareholder, you also get every benefit that comes with being the rightful owner of your shares. For example, your dividends get paid straight into your bank account. If a company does something like a rights issue or an offer to buy your shares, that notice comes straight to you too. On top of that, because your shares sit in one central place and aren't tied to any single broker, you can buy and sell through whichever CDP-linked broker that you like. And because your shares remain in your own CDP account, you can continue accessing them through other CDP-linked broker if needed. However, the thing that has always bugged me was how much CDP cost me in fees every time I buy and sell. Buying or selling a counter through a traditional CDP broker will cost you a minimum of around $25. That's literally 6 plates of chai fan every time you make a trade. Of course, there are now cheaper ways to trade through CDP, thanks to the newer low-cost brokers that have entered the scene. Take Moomoo for example. It now lets you buy and sell shares through CDP for just $10 a trade instead of $25, cutting the cost by more than half. But despite that, the cost problem is still there, and you pay it on every single trade. So the more often you buy or sell, the more it quietly adds up. In comparison, that same trade in a Moomoo custodian account would only cost you about $2 or $1 in the first year, thanks to their welcome promo that waives the conversion for new users. And later this year, parking your shares in your CDP accounts is going to make even less sense, because starting from the 5th of October, SGX is going to cut the board lot size for stocks, and about time too, because the board lot size has always been a huge barrier to entry for the smaller investors. Right now, if you wanted to buy a stock like DBS, not financial advice of course, you will have to buy a full lot of 100 shares, which works out to around $7,000, and ain't everyone got money for that. But after the change, you only need to buy a minimum of 10 shares, or $700, which makes it far more accessible. That's great, because this makes investing more accessible to everyone, and not just the 60-plus-year-old uncles and aunties whose monthly CPF payouts can bankroll their blue chip shopping every month. But what this also means is that if you are just buying 10 shares of, say, OCBC through a CDP account, you'll be paying a whopping $10 to $25 in fees. That's about 4% to 10% of your money gone before the stock has even moved. Meanwhile, that same trade in a custodian account would only cost you around $1 to $2, or less than 1% of the trade. And over the long term, those savings do really add up. Besides that, there's also my own sanity. While having your stocks in CDP sounds convenient, the problem is that your CDP holdings don't show up inside your broker's app. So if you ever want to admire or check your holdings, you have to log into the SGS portal separately just to see them. And that can be incredibly mafan. Plus, it's not just me who thinks custodian makes sense now. Even the regulator is now backing it by actively supporting wider adoption of broker custody accounts. So before this, all brokers were required to park their clients' Singapore shares in a separate account at CDP, one for every single client. While this method worked, it was rather clunky and it wasn't how the rest of the world does it. However, starting from the 15th of July, SGS now lets brokers hold all their clients' Singapore shares together in one custody account instead of a separate CDP account for every single person. For years, this has been the exact same way your own broker has held your US and Hong Kong stocks, and now it is finally becoming the mainstream way to hold your Singapore shares too. So when you add all of that up, because I want to save on the fees, because I can now buy Singapore stocks in smaller amounts, and because I just want everything in one clean dashboard, I felt that holding my shares in a custodian broker like Moomoo simply made much more sense than keeping them in CDP. But of course, there's still the question of whether it is safe to actually keep my stocks with a custodian broker like Moomoo. I asked myself the exact same question when I first started. But I've been using Moomoo for about 3 years now, and after seeing how it works up close, I'm comfortable enough to move my own CDP shares in. But if the shares are under the broker's name, how safe is my money really? Turns out it's actually quite safe. That's because even though the shares are now held under the broker's name instead of your own name, ultimately, you are still the beneficial owner of your holdings. So those shares are still yours. On top of that, Moomoo isn't just regulated by MAS here in Singapore. Its parent company, Futu, holds over 100 licenses and qualifications across 8 markets worldwide, and is regulated by top-tier watchdogs like the SEC in the US, ASIC in Australia, and the SFC in Hong Kong. More importantly, they are required by law to keep your assets separate in a segregated trust accounts. That means they are held separately outside the firm's own books. So even in the event the broker itself goes under, your assets are still safeguarded. And Moomoo isn't some anonymous startup either. Its parent company, Futu Holdings, is listed on the Nasdaq under the ticker Futu. So its financials are out in the open, filed publicly every quarter for everyone to check. Looking at the numbers, Futu now serves over 30 million registered users and holds more than $155 billion in client assets, up over 45% in just a year. So when you park your shares with Moomoo, you are trusting a Nasdaq-listed company that's genuinely thriving. There's also one more thing that sets Moomoo apart. It has 4 physical stores here in Singapore at GEM, 313, Bugis, and Parkway Parade, where you can actually walk in and talk to their team face to face if you ever have any questions. But perhaps most of all, this is where a custodian broker really pulls ahead of most traditional bank brokers. Because of the competition, a custodian broker has to innovate and offer features that go well beyond just buying and selling. For a start, everything finally lives in one place. Your Singapore, US, and Hong Kong holdings all sit inside a single consolidated portfolio. So you can see everything you own at a glance, instead of jumping between apps or logging into a separate portal just to check your CDP shares. On top of that, you can buy Singapore stocks in odd lots, so you're not forced to fork out for a full board lot just to get in. And every dividend you are due to receive shows up in one dividend calendar, so you always know what's coming and when. And speaking of dividends, once they land in your Moomoo account, you can switch on a feature called Smart Save. It automatically parks your idle cash into money market funds, so your money keeps earning interest while you take your time to hunt for your next investment. Then there are the tools. First, it has a built-in AI assistant called Moomoo AI. You can ask it any investing question you want, from breaking down a stock's fundamentals and technicals to simplifying an earnings report for you, to even analyzing your portfolio itself. For someone who doesn't have hours to do all that research on their own, that can be incredibly helpful. Second, the data and the charts are on a different level. The platform comes with free real-time quotes, professional charts with dozens of indicators, and live market news, all in one place. This is the kind of stuff traditional brokers either locks behind a paywall or simply don't have. Third, there's serious company research built in. With it, you can easily pull up a stock's full financials and valuations, check the analyst ratings and price targets, and even track what the big institutions are buying and selling through their 13F filings. Beyond the tools, there's also a whole community built right into the app. On the social feed, platform verified investors and top community creators share their real trades and market insights, so you get a real sense of what experienced people are doing with their money. There are live talks too, and even MooFest, their biggest event of the year, where thousands of investors show up in person for a full day of talks and workshops. So instead of investing in a vacuum the way you do with a bank broker, you are always surrounded by other investors sharing what they are thinking. And the best part, Not only is moving your shares from CDP over to Moomoo incredibly easy, it's also completely free. All you gotta do is open up the app, tap on Accounts, More, and select CDP Share Transfer. Then fill in the rest of the details. And once approved, the transfer will complete in just 3 to 5 business days. Oh yeah, did I also mention that it's rewarding too? Not only will you get the welcome reward of up to $1,200 when you sign up with my link and meet the terms and conditions, Moomoo SG is also running a transfer in promo right now, where you can get up to $3,500 worth of trading cash coupons or even an iPhone 17 Pro Max when you transfer your stocks in from CDP. And there's an extra perk on top. If you transfer in at least $10,000, you will also get an $88 trading cash coupon, a 1-year SG Stock Zero commission card, and a lucky draw chance to win prizes worth up to $2,000. Terms and conditions apply. At the end of the day, moving your shares into a custodian account like Moomoo makes the most sense if you want to save on fees and get more than what a traditional broker has to offer. But whichever you lean, at least now you know the real trade-off. So you can make the call that actually fits how you invest. And if you want to do the switch, Moomoo's transfer in promo is live right now, with my referral links down in the description below. Anyway, that's all for this video. Hope you found it useful, and as always, I will see you in the next one.